Okay, so we'll have a separate file for chapter 16. So let's go ahead and let's take a look at chapter 16. Okay, and now we're going to talk about healthcare organizations, essentially hospitals. Okay, again, very short slide presentation here. We're just going to see what's unique about hospitals. And again, it's going to center around the revenue part of the statement of activities, just like we saw for the colleges. Now, it's worth realizing that hospitals can be obviously for profit. They can be what? They can be a not for profit, like what we're studying here. And you can also have a government not for profit, like a county hospital. If we're dealing with government not for profits, a county hospital, they tell us, hey, just do everything we already told you for state and local governments. For profit would do everything you've learned in your intermediate. So we're really focused on this center box here, which is what? A not for profit hospital. Okay. So when we're dealing with a not-for-profit hospital, we're following FASB, right? If we're dealing with a private not-for-profit, we're following FASB. If it's a government not-for-profit, then we would follow the. Let me slow down, John. If we're talking about a what private not-for-profit, we follow FASB. If it's a government not-for-profit, we follow GASB. Okay, so when we look at the practice final here in a little while, in a couple minutes, you're going to see that they keep calling out a private not-for-profit organization, a private not-for-profit organization. Just assume that they're private not-for-profit organizations. We are not going to be dealing with the accounting for government-operated not-for-profits because we already dealt with government in the first 8 chapters. Yes, sir.
Um, it says that healthcare entities like have to follow the GASB codification because they're governmental business type. Um, my question is, does Kaiser Permanente have to do that as well, despite the fact they're private, not for profit?
No, they're not government not-for-profit. They're private not-for-profit, so they follow FASB, what we're going to learn here.
Okay.
Which, well, I should say what we're going to learn here, which we've already learned. There's only going to be a small thing that we're going to have to focus on that are unique for the hospitals. But Kaiser would follow, their financial reports would follow what you've already understood from chapter 14, 13, essentially.
Oh,
Yeah. hmm Yep. Okay, now if it's a for-profit hospital like I guess Eden Hospital is for-profit where my dad was before we got him back. We got him back home over Thanksgiving. My dad, drives me nuts. The whole time he was in the nursing home, every time I go see him in the nursing, oh, you don't know how happy I am to see you. I want to go home. Dad, wait a little while, we'll get you home. Okay. Then what? Then I get him home. He's like, fuck. What happened to the guy that was happy to see me? Now he's all, demanding and wanting this and that. I'm like, okay. You're going back to the nursing home. Okay. All right. So that's the nature of our conversations. What's so funny? Okay. All right. So anyway, what was I talking about? Some hospitals can be for profit. Okay. Yeah. Okay. But you take a look here, and again, we are going to, what this slide is all about is more about what's the same than what's different. The balance sheet is called the statement of financial position. The income statement is called the statement of activities. The statement of cash flows is called the statement of cash flows. Okay. All right. Good.
so statement of operations is the income statement.
Well, I should get rid of these slides, these 2 slides, because these are confusing. So ignore these. I don't know what the hell they're talking about, to be honest with you. I should get rid of this. I don't know what they're talking about. All not-for-profits, private not-for-profits have the same 3 financial statements, which is the statement of financial position, which is the balance sheet, statement of activities is the income statement, and the what? Statement of cash flows is the statement of cash flows. That does not vary. That's the same amongst all not-for-profits. So I need to delete these slides. I don't even know why these are in here. Who put those in there? Did you put those in there? Okay. Now, um, there's also a statement, what used to be called a statement of functional expenses, that used to be required. Now they don't require it as a separate statement. They tell them you can make it as a separate statement, and they don't give it a name. So that statement's kind of like Prince. They call it the statement formerly known as the statement of functional expenses, but it is no longer called the statement of functional expenses. It's not called anything. It doesn't have a name anymore. And you can either provide it as a statement or you can provide it as a footnote disclosure. That information, remember we had that statement where we saw whatever the particular program was, program A, and then you saw how much money they spent on salaries, how much they spent on fundraising, all that different stuff. Okay, that either has to be, that information has to be provided as a separate statement, which we will not give it a name, or it has to be in a footnote disclosure. Okay, but the required financial statements, there are three of them. Statement of financial position is the balance sheet. Statement of activities is the income statement. The what? Statement of cash flows is the statement of cash flows. Okay. Okay, good. Now you take a look, and we have here the different types of resources that can come into a not-for-profit. For example, patient service revenue. Even though we're not for profit hospital, we might charge for some of the services that we provide, right? Does Kaiser charge you for services sometimes? Yeah, they do, right? Okay. We have what? Third-party payers. These are going to be the insurance companies that are going to pay the hospital. Okay. Medicare would be the government, Medicaid, etc., right? Different amounts of money that are going to come into this not-for-profit. Now, when we come over and we get some service, we provide some service, we credit the revenue at the normal rate, whatever it is. So if you have to go in and get surgery in the hospital, they charge you $50,000, right? And if you go in with no insurance, they will charge you $50,000, right? Now, let's say you show up and you hand them your Blue Cross card. Does Blue Cross pay them $50,000? Blue Cross says, hang on a minute there, little hospital. If you want all this Blue Cross business, we expect that you're going to negotiate a better rate for that surgery than $50,000. We want that surgery done for $30,000. And the hospital says what? Okay, because they want all that Blue Cross business, don't they? Okay, so what happens? The hospital will credit the revenue for $50,000, but they know that they're only going to get what? $30,000 from the insurance company, so they will debit a what? Contra revenue. It's like sales discounts again, isn't it? For the amount that they're not going to get on that. So Blue Cross is pretty powerful, isn't it? And they can negotiate all those. What do you think would happen if there was only one payer? There was only one entity that paid for health care. What do you think would happen to the price? Huh? Why would it go up? Did you guys study economics? Okay, if you have what? If you have what? One entity that's going to pay, what should happen to the price? What's going to happen to the price? Okay. Let's have a little economics lesson here. Let's have a little economics lesson. You have to come to me to get paid. I'm the only one that's going to pay you. I'm a monopsony, is what they call it in economics. I mean, don't get me started on economics. You know how many friends I lost when I started studying economics? Okay. That's called a monopsony, when you only have one payer. What happens to wages when you have a monopsony, when you move to Mississippi and some aluminum plant is the only one that's going to pay everybody in that town where they set up the plant? Why do you think they do those things? Why do you think they have a plant in Mississippi somewhere out in the middle of nowhere, and all of a sudden you see an aluminum plant there? Why do you think they do that? Because Mississippi is so cool to hang out in? They do that because they know that they now hold that town captive. That whole town exists because of the aluminum company. So what do you think happens to wages in that town? Huh? Wages go down, don't they? Okay, so if you only have one payer for all health care, what's going to happen to that price of the health care? It should go down, shouldn't it? So what would happen if the government passed a law that said, we are saying that everyone is entitled to health care and we're going to pay for it? What would happen to the price of health care? It should go down, shouldn't it? I'm just saying. And that is not an endorsement for Elizabeth Warren or Bernie Sanders or anyone else in particular. I'm just saying. Because what? The cost associated with that is, well, okay, it's one thing to stand up there and say, hey, we're going to have Medicare for everybody. It's another thing to do what? Pay for it. Okay, so that's something that's got to be figured out here pretty quickly anyway. Okay, all right. Now what happens? You sit here. I mean, that is a crisis in the United States. How are we going to pay for health care, right? Okay, and that's one of the proposals is have the federal government be the one that pays for everyone's health care. Then we set the rates, right? And some people say, well, we don't have the money for that. Some people say, well, hang on a minute. I don't want to go to the same hospital that you go to. I want to go to the hospital with the really, 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 really good doctors. You go to the ones where the doctors screw up and kill people. You laugh. It happens every day. Every day. Medical mistakes are the number one cause of some kind of deaths. I don't know. now I'm out of bullets. Okay. All right. So what happens? I talked myself off the stage. Okay. So what happens? We sit here and what? We sit here, but it is a leading cause of deaths anyway, is from medical accidents, malpractice. Okay. Anyway, so what happens? We come over here and back to the accounting. We are going to what? Debit this contra revenue account. So when we end up looking at our charity care is not recorded. So what happens? Somebody without any insurance, somebody without any resources is injured. They get brought into the hospital. Can the hospital say, hey, you don't have any insurance, get back out there and bleed on the street, don't bleed in our hospital? Can they do that? No, they cannot do that. They have to care for that person. Okay, they have to stop the bleeding. Just enough. They stop the bleeding just enough to then throw them out. Okay, so if they need 10 Band-Aids, they'll put 8 on there. Okay, but what happens? So they'll just put the 10th one and they'll stop. And then they'll say, get out there and hopefully you won't start bleeding again and come back. Okay, so what happens? When they provide that sort of charity care, it is not recorded as a revenue. It is not recorded as a revenue. Okay, notice, guys, we're focusing on things that are what? Unique to hospitals. Third-party payers paying insurance, we reduce our revenue by that amount, right? Charity care that's provided is not going to be recorded. Okay, so what happens? When you look at now our statement of activities for Generally, if I make that noise, it opens up the way I want it to. Come on. Not going to do it for me? Yeah! Yeah! Okay. It's not going to do it. Okay, so we'll just have to see it as the way it is up here. Okay. Notice that we have what? We have net patient revenue. See the net patient revenue? See those little stars right there? When you look down, this is why I was trying to make it bigger. It says revenue from healthcare services not reported net of contractual adjustment and other adjustments, meaning what? Net of charity care. So when we're trying to calculate the revenue, we would back off any what? Any adjustments for third-party payers that they've negotiated a better rate, whatever, and what? Any charity care. Okay? So when you look at this question, this is dealing not necessarily with hospitals here. This is dealing with any not-for-profit in which they say that they've determined that 10% of the charitable contributions will not be collectible. Now, we saw last time that what? We would debit the account receivable gross. we would do what? We would credit an allowance, 10,000 in this example, for the part that's not going to be collected, and then we record the revenue net of the contribution, I should say, net of any amounts we're not going to collect. Remember we said that last time? So we don't take a bad debt expense when it's in a contribution because there's no exchange. There was no paying for a service and receiving the service, right? With me so far? When we're talking about a hospital, though, which is what this question is doing, the hospital is what? The hospital is providing a service and receiving money in exchange for that, aren't they? So if they have an uncollectible amount, provision for bad debts, they're going to do what? Debit the bad debt expense and credit the allowance for that, right? Because there's an exchange there. Okay, so when this question asks me what's the net patient service revenue, it's a little bit tricky in that I do what? I pick up the 75,000 and they 775,000, and they tell me that that includes 25,000 of charity care. Am I supposed to include charity care as part of my net revenue? So I have to back that out, don't I? I back out that 25,000. Then they tell me what? Then they tell me that there's a contractual adjustment of 70,000. I have to back that out, don't I? I do not subtract the uncollectible amount because I'm setting up a bad debt expense for that. I don't reduce the revenue for a what? When a service has been provided. Instead, I would set up a bad debt expense, and I don't reduce the revenue. Two different treatments of uncollectible amounts depending on whether it's a contribution or depending on whether it's a charge for service, right? If it's a contribution, you reduce your contribution by the amount you think you're not going to collect. If it's a what? If it's a charge for service, you don't reduce the revenue by the amount you're not going to collect. You literally would set up a bad debt expense and credit the allowance. Question? Two different treatments of uncollectible amount depending, right? If it's a contribution, reduce the contribution by the uncollectible amount. If it is what? A charge for service, don't reduce the revenue by the amount you think you're not going to collect. You would debit bad debt expense, right? And credit the allowance for that. Okay? There you go. Debit bad debt expense, credit the allowance for amounts you think you're not going to collect. Question? Okay, again, what we dealt with was what? Things that were unique to universities, things that were unique to hospitals. The vast majority of everything we talked about in chapter 13, 14 is the same across the board for all not-for-profits, right? Whether they be hospitals, whether they be educational institutions, whether they be just a general voluntary health and welfare organization, say United Way. Question? Okay, good. So with all that, we can now take a look at the practice final.
So just a question, the hospitals have statement of financial position, statement of revenues, expenses?
No, I crossed that out. I crossed those out. All not-for-profits have the same exact names of the statements. I don't know why I have those slides in there. I should get rid of them. The balance sheet is called the statement of financial position. The income statement is called the statement of activities. The statement of cash flows is called the statement of cash flows. That's it. Forget that other stuff. I don't know what the heck that is. I don't know how that got in there. I should have deleted that. 3 statements are required. They can, if they want to, provide another statement, which used to be called the statement of functional expenses, which no longer has a name. So it's a statement formerly known as the statement of functional expenses. But they do have to provide that information either in the format of a nameless statement or in a footnote disclosure. Okay? Yep. Okay, so we are looking for the practice final, which for this last stuff is located under Chapter 13. So that's where it is. It's under Chapter 13 here. Okay. And when you look, you can see there is 2 of them. Okay. We're going to do this one. The other one I'm going to leave you to work on your own so that you get some practice figuring things out. Actually, you know what? The one that I want to work is not that one. I actually want to work the second one. See the second one? This is the one I'm going to work. Okay, now when you look at it, it also, guys, pay attention. Pay attention. I mean, if you're that interested in the person next to you, go outside and hang with them. Okay? Okay, this one, there's a blank version and a marked up version. I give you the blank version because you may want to erase, unhighlight the answers and work it like it's an actual test. Okay, but I'm going to walk through the marked up version with you. And then there's another one that I'm not going to talk about tonight that you'll look at on your own. So we've got 2 practice finals. You see 3 files up there. One of them is marked up. This one, the other one is not marked up. So you can just erase the answers and practice with it that way. Okay? Question? Okay, let's go ahead. I'm going to put the screen up for this. You don't know how cool that is. If I'm in San Francisco State, I've got to spend 15 minutes trying to put the thing back up because their screens have lost all their elasticity, and so they won't go back up. You got to kind of like sit there and roll them back up into the thing practically. It's ridiculous. Meanwhile, they just got like this huge donation from that Chris Larson guy, the guy that made billions in cryptocurrency and stuff. So he donates all this money to San Francisco State. Meanwhile, the business department is broke, from what I can tell. They don't turn the heat on. They don't fix the screens. I don't know what the hell's going on. I don't know what they're spending that money on. Okay. Cut. Yeah. Okay. Erase that. Okay. All right. So you come over, and meanwhile, here at San Jose State, you just press a button, and the screen just goes up nice and smooth and quietly. If we're at Stanford, we just go screen up. No, I'm just kidding. You also have to press a button there, too. All right, so I don't know. You get south of the San Mateo Bridge, things start getting a little better. All right, so what happened? We come over here, number 2. At the beginning of the year, the Baker Fund, a non-governmental, not-for-profit corporation. Guys, do not be distracted by that. That's what we're studying in these last couple of chapters, right? Non-governmental, not-for-profits. Okay. And we say they received a contribution of $125,000 restricted to youth activity programs. During the year, the youth activities generated $89,000 and had program expenses of $95,000. What should Baker report as net assets released from donor restrictions? Now remember, last time I told you we had somebody donated to save the canines, and I told you that I would sit there and I'd tell you the whole story and then just ask you about one part of the statement of activities. That's what we're doing here. Okay? And the best way to handle these questions, guys, is exactly the way I put it up here on the board. When you get a question like this, you sit there and you make yourself a little statement of activities. I'm telling you, this is how you get these right every single time. Okay, and just put on the statement of activities what happened. So what happened? On our statement of activities, we get a contribution. $125,000 came in with donor restriction, didn't it? Said they had to be used for youth programs. Then there was a charge for services that were what? They generated $89,000 of revenue. $89,000 when you charge someone for service, that's automatically considered without donor restriction, right? So that comes into the without donor restriction column. Then what? Then they sat there and they satisfied the donor's requirements by spending $95,000 on that program, didn't they? So when they spend that $95,000, we have a reclassification adjustment in which $95,000 comes out of the with donor restriction and into the without donor restriction, doesn't it? And then by definition, all expenses are without donor restriction, the $95,000 that was spent. Is that how the statement of activity works that we talked about last time? Okay, so the amount released, and then, like I said, the question just focuses on one part. Tells you the whole story, and then it just wants to see how the statement of activity is affected by one part of the overall transaction. And they say, well, what was the amount released? The amount released is $95,000, isn't it? Question? Ah, no. Okay, some of these, the numbers are a little bit weird because I deleted some old questions. Okay, so what happens? In his fiscal year ended June 30, 2015, Barr College, a private institution, received $100,000 designated by the donor for scholarships for superior students. On July 26, 2015, Barr selected the student and awarded the scholarship. How should the July 26 transaction be reported on Barr's statement of activities for the year ended June 30th, 2016? Now what happens? Well, we have a first fiscal year that ends June 30th, 2015, don't we? And then the money is finally spent in what? In that next fiscal year, July 26, right? That next fiscal year starts July 1st. Okay, and they're asking us what should be reported in the June 30th, the second year in this transaction, the 2016, right? Okay, but just for fun, let's take a look at what happens. We get the contribution that comes in what? With donor restriction in fiscal 2015 for $100,000, right? Right? Then we go to what? Fiscal 2016, and in fiscal 2016, what happens? Well, now in fiscal 2016, we satisfied the donor's restriction. We awarded the scholarship, didn't we? On July 26th. So on July 26th, what happens? We would go ahead and take that out of the with donor restriction and put it into without. Out of with and into without. Out of with and into without. Right? Okay, comes out of with, into without, and then by definition, all expenses are without donor restriction. Right? So when you look at the choices here, is it true that it shows as both an increase in and decrease of 100,000 in net assets without donor restrictions? In that next year in 2016? Right? So a question like this, guys, which is something that you see a lot on the CPA exam, is simply testing, do you understand the mechanics of the statement of activity, right? And the mechanics of the statement of activity is not that difficult once you get it. A question like this could drive you nuts if you didn't understand anything about what was going on with the statement of activities, right? And the only thing that made this a little bit hard was they went across fiscal years, right? This is no different than the little example we had with Save the Canines. The money came in 2019, the $10,000. In what? 2020, we said, hey, we spent the money, so we reclassed what? $6,000 out of the with donor restriction, put it into without donor restriction, and then we had the expenses of $6,000. So I could have asked you that same question for Save the Canines example that we had last time, and we would have said that it would be reported in 2020 as both an increase and decrease of $6,000 in the without donor restriction column. Okay, number 4. By the way, I think I borrowed all of these questions from the CPA exam. I think every single question in this file is CPA exam question. Okay, the Jones family lost its home in a fire. On December 25th, 2014, a philanthropist who wished to remain anonymous sent money to the Amir Benevolent Society to purchase furniture for the Jones family. How about purchase them a home? I mean, how cruel is that? Hey, your house burned down, but here's some new furniture. Okay. Now, what happens? During 2015, Amir purchased its furniture for the Jones family. How should Amir report the receipt of the money in the financial statements for the year ended December 31st, 2014? Well, let me ask you. Did the philanthropist give the Benevolent Society variance power? They did not. They directed them to give the money to a beneficiary, didn't they? So that's a what? Liability? They didn't say, hey, use it how you see fit, give it to whoever. They said, hey, here's some furniture. Give those people who don't have a house some furniture. Number 5. In a statement of activities of the People's Environmental Protection Association, a voluntary community organization, depreciation expense should be reported as an element of expense. All this is testing is, do you understand that for not-for-profit organizations we use full accrual accounting? So we kind of hypnotized you into forgetting about depreciation when we're dealing with the governmental funds, only to bring you back into the light by having you deal with full accrual accounting and remembering that there's depreciation there, right? The following expenditures were made by green services. What amount should be classified as fundraising? Remember, guys, we have to separate our expenses into whether they are program or support, don't we? Program are things not-for-profits do, like Save the Canines, it's pet care, right? Our support services are things like administrative cost and fundraising. All this question wants us to do is see if we can categorize our expenses correctly, which is what you have been trained to do over the last 4 years. That's all you've been trained to do, is look at a description of a transaction and know where to put it. Okay, so what should be classified as fundraising costs in the statement of activities? How about printing of the annual report? Printing of the annual report is not a fundraising. It is an administrative cost, isn't it? You don't fundraise through your annual report. It's a statement you have to prepare, right? It's something you're going to prepare, but it's not fundraising. How about unsolicited merchandise sent to encourage contributions? You think? Sounds like fundraising to me. How about cost of an audit performed by a CPA firm? That is what? That's more of an administrative cost, isn't it? None of these are program. So if I asked you what the program costs were, then the answer would be this 0, right? Okay. Number 7. All pledges are legally enforceable. However, the league's experience indicates that 10% of all pledges prove to be uncollectible. What amount should the league report as pledges receivable, net of any required allowances? And it would be nice if I had given you the amount of the contribution here for you to be able to answer that. But by knowing the answer, I can figure out what the pledges must have been. They were $350,000. Somehow I deleted the amount of the pledge when I was trying to bring this question into this file, I guess. So the pledge was $350. We debit what? Pledges receivable gross, don't we? But we reduce the contribution by the amount we think we're not going to collect, right? Is that what we're supposed to do with pledges? Contributions. So we go ahead and we credit the what? Contribution, $315,000. That probably should have been contribution, credited $315,000. And we credit the allowance for the amount we think we're not going to collect. What happens if somebody calls us up and says, I'm sorry, I can't give you the contribution that I promised you? I was trying to help, but I need help now. Huh? I already lowered the contribution. I credited contribution net of the discount, right? Now the person is telling me they can't pay me. Huh? Huh? No. Come on now. Let's not get silly. Accounting is not a guessing person's game. If you don't know, don't say anything. What happens when we don't collect on a receivable? Pledge receivable or otherwise?
Bad debt expense.
Well, we didn't take a bad debt expense here, and that's not what you do when you realize that a pledge is not when an account receivable. You don't debit the bad debt expense. You debit the bad debt expense at the time of sale. We never took a bad debt expense here because this is a contribution. What do we do when the person finally comes around and says they can't pay us?
We credit allowance for uncollectible accounts.
I already credited the allowance at the time that the pledge was given.
Then
Now they're telling me they can't pay me. If someone can't pay me, am I still expecting a future economic benefit?
No.
So I guess I better reduce an asset, right? Okay, what asset do you want me to reduce?
liability.
If I ask you what asset do you want me to reduce, your answer can't be the liability. What? I'm going to go ahead, good. If they told me, hey, I can't pay $10,000, let's say, I'm going to go ahead and I'm going to credit pledges receivable for the $10,000. Okay, good. What do you want me to debit? I debit the allowance. That's what I set the allowance up for, right? Guys, allowance accounting? It's simply allowance accounting, isn't it? I set up the allowance at the time that the pledge comes in, right? For the potential that somebody won't be able to pay me. And then when finally somebody can't pay me, I have to write off the receivable. I debit the allowance. That's why I set up the allowance, right? The only difference between this and what you would do in commercial or what you would do if it was a revenue for a fee for a service being generated by the not-for-profit is we didn't record the bad debt expense, right? We simply reduced the contribution by the amount we thought we weren't going to collect. Hello? Okay, good. Number 8. Midtown Church received a donation of a marketable equity security from a church member. The security had appreciated in value after they were purchased by the donor, and they contributed to appreciate throughout the end of Midtown's fiscal year. At what amount should Midtown report its investment in the marketable security in its year-end balance sheet? We're going to do what? Report it at its market value, and any unrealized holding gains and losses will be a credit to what? Gain on marketable security that will be reported on the statement of activities, right? When a not-for-profit organization combines fundraising efforts with educational materials, what should we do? Remember, if we have what? Combined costs. Remember the doggy grooming class example? We have to allocate our costs between the fundraising, which is a support item, and program. I think I gave the example where I got somebody and I got them to donate, to pay more for the doggy grooming class, and there was a fundraising appeal there. I have to do what? I have to allocate my expenses between their support component and their program component, right? Number 10, an unrestricted cash contribution should be reported on a non-governmental not-for-profit statement of cash flows. Remember, we said if it is without donor restriction, it is considered operating activity on the statement of cash flows, right? A not-for-profit voluntary health and welfare organization should report a contribution for the construction of a new building. Remember, if we receive contribution and that is what? With a donor restriction for long-term purposes, it shows up as financing activity, doesn't it? On the statement of cash flows. When we spend that money for the long-term purpose, let's say we purchase some long-term equipment, where should we report the spending of that money on the statement of cash flows? When you spend money on things like equipment, where should you report that on the statement of cash flows? Huh? Okay, this is the same thing that would happen in commercial. When you purchase things like equipment and whatnot, it goes to what? Investing activity, right? So when we receive a contribution restricted to long-term purposes with donor restriction for long-term purposes, it comes in as financing. When we ultimately satisfy that restriction on the statement of cash flows, it shows as a investing activity, right? Just like it would in commercial if you purchase a piece of equipment or something. Did you guys study statement of cash flows?
So the not-for-profit contribute the contribution to the not-for-profit. It's a financing activity because it's being reported to contribute to finance the construction of a new building.
That's correct. When you receive a contribution restricted for long-term purposes, it comes in as financing. Building is considered a long-term purpose, right?
Yeah.
So it comes in as financing. When you finally spend that money, it goes out as investing. Right? Well, there's no, okay, if you say so. What do you think? I sit up here and I make all this shit up? I mean, this is the rule. This is what FASB tells us we have to do. When you receive the money and it's restricted for long-term purposes, it goes into what? Financing activity. When you spend the money, like you would for commercial, when you spend money on a long-term item like equipment, it is investing, isn't it? Okay. Number 11, private college provided you with the following information: unrestricted pledge of $50,000 to be paid the following year, and $25,000 cash gift restricted for scholarships, and a note from a recent graduate that the college is named as a beneficiary of $10,000 in the graduate's will. Okay, now they ask us here what amount should be contribution. And guys, if we put the word revenue after the word contribution, we mean contribution. We don't mean a charge for service. We mean contribution. Sometimes you'll see the word revenue after the word contribution. Go with the first word. Since it said contribution, it's a contribution. Okay, so what should be reported as contribution? Now, this question sets you up to start thinking that somehow you should partition between what? That with and without donor restriction. Does it say that? It just says contribution. They want the total, whether it's with or without, don't they? So does all of this stuff qualify as contribution? Is any service being provided here?
Well, 25,000 cash gift is being restricted for scholarships. So
we're not partitioning between restricted and unrestricted here. Restricted with donor restriction and without. It did not ask me that. It simply said what should be considered contribution. They want the total.
So it's going to be the 50,000 plus the 25,000, but not the 10,000 because it was a long-term notice.
Well, it's not because it's a long-term notice. I mean, you got the 50 and the 25,000 correct because what? Because the answer is 75,000 and you knew you had to add 50 and 25 to get there, right?
And also because they were both contributions.
Are these contributions without or with donor restriction? How about the 50,000? I'd pay attention. How about the 50,000? Why would that be without?
Because it's unrestricted.
Oh, I see. Well, I see. This is a good point. Why you're confused. It says without unrestricted, but it's to be paid in the following year. Can I spend that money as I see fit right now?
No.
I cannot because I don't have it yet. So that's considered what? With donor restriction. It's restricted by time, isn't it? 50,000? Okay. How about this 25,000 restricted to scholarships? That's with, isn't it? So we know the answer is 75,000, right? So the question, even though we didn't have to put it into categories of with or without, so that really, knowing that it should be with donor restriction really didn't impact your ability to answer this question. It should be with donor restriction because it's a time restriction, because I can't spend the money if they haven't given it to me yet because they're going to give it to me next year. Okay? But why did we not include the 10,000? Yes, sir. Huh? Somebody has to what? Somebody has to die. It's a conditional. Remember we talked about unconditional pledge versus conditional pledge? This is conditional, and the dude's got to die, right? And they can't say, well, wait a minute, he's going to die. Yeah, but he hasn't yet. So the condition has not been met. So we don't take that at all, right? Good. Okay? Okay, good. During the current year, a voluntary other web organization receives $300,000 in unrestricted, and I put they must mean unconditional pledges, and I'll show you why in a second. I just stuck that in there. Of this amount, 100,000 has been designated by donors for use next year to support operations. If 15% of the, again, they must mean unconditional pledges, are expected to be uncollectible, what amount of unrestricted support should the organization recognize in its current financial statements? So what happens? There, I think they did mean unrestricted. So this is unrestricted without donor restrictions, and we have what? 200,000, of which they said 15% is uncollectible. So that means that what? That 85% of that is what they'll collect. So we take the contribution net of what they think they're not going to collect. Okay? The reason I say instead of unrestricted, they must mean unconditional pledges, because if it's 300,000 that is unrestricted, I should have used what? I should have used the full 300,000 on this, right? Okay, so they must mean 300,000 unconditional of the amount 100,000 has been designated by donors for next year. Next year means that what? That amount is
Used next year.
good. It's used next year. Therefore, that amount is with the donor restriction, isn't it? So I can't get there with the full 300,000. So the 300,000, they can't say all of that's unrestricted because 100,000 is what? Not 100,000 is for use next year, so that's restricted, isn't it? By time. Okay, so that leaves me with then what? 200,000 that remains unrestricted, right? Without donor restriction, and that's how I end up with the answer. It can't be that the 300,000 is unrestricted because what? The 300,000 is unrestricted, then how can we say that they've said it's for use next year? That's a restriction, isn't it? So I'm thinking they must have meant unconditional. Number 15, a non-governmental not-for-profit organization borrowed 5,000, which it used to purchase a truck. In which section of the organization statement of cash flows should the transaction be reported? When we borrow money, borrowing is financing. When we spend money, that is on things like equipment, that is what?
Investing.
Investing, just like commercial, right?
Yeah.
Number 16, Jana Associates, a non-governmental not-for-profit organization, received a cash gift with a stipulation that the principal be held for at least 20 years. How should the cash gift be recorded? Time is a donor-imposed restriction, isn't it?
Yes.
So that is what? A contribution with donor-imposed restriction? Number 17, in the preparation of the statement of activities of a non-governmental not-for-profit organization, all expenses are reported as decreases in the without donor restriction column. We said that a number of times, right? The Turtle Society, a non-governmental not-for-profit organization, receives numerous contributed hours from volunteers during its busy season. I don't know what the busy season for turtles are, but okay. Chris A clerk at the local tax collector's office volunteered 10 hours per week for 24 weeks transferring the turtle food from the port to the turtle shelter. His rate of pay at the tax office is $10 per hour. The prevailing wage rate for laborers is $6.50 per hour. What amount of contribution should we report for that? Again, remember if the word revenue comes after, we're talking contribution, right? And this is a contributed service, isn't it? And we recognize the value of contributed services some of the time requires a specialized skill, was otherwise needed, and is measured easily. Now, they give us the information to measure it easily, and I'm assuming if it's busy season, it must be needed to do this. But is it a specialized skill? Even though the individual is what? Probably skilled. They work in the tax collector's office. They may even be an accountant. It is not what? They're not providing us with that specialized skill. Therefore, the answer is 0 here. Do not recognize the value of that service because it didn't meet all of the criteria. Got to meet all of them. Specialized skill, otherwise needed and measured easily, right?
If he were volunteering to do tax, then it would not be 0.
Yeah, if he was saying he provided the Turtle Society, expert information on tax collection or something, I don't know, then yeah, then it would be included because he'd be providing a specialized skill.
What if it's like a specialized? Can it be? Is there like a minimum specialized skill to be categorized as specialized skill? What if like a lot of the workers have no arms, like they're like or they have amputee victims, and then so you volunteered, like it's not specialized that you have arms, but you're helping out with. Would that be specialized or no? I'm just throwing it
Okay.
out.
Well, there's lots of people without arms that can provide very specialized skills, so I'm not sure the without arms thing is making a whole lot of sense to me. Okay, but um, for example, okay, you have organizations like Habitat for Humanity, right? Okay, and what organizations like Habitat for Humanity will do is they'll call in volunteers to come in and maybe like put up the sheetrock inside of homes and stuff. Okay, there was an organization that I was involved with. I wasn't involved with them. I was auditing them. So I guess that's an involvement with them. I was auditing them, in that it was called the Self-Help Opportunity Program. And so with the Self-Help Opportunity Program, what they'll do is they'll have low-income they'll help low-income individuals get homes that they actually have ownership. They give them a low-interest rate loan, and then the communities come and they help to build. You help me build my house. I help you build your house. And then what they'll do is they'll sometimes bring in, like, say, a CPA firm that'll come in and help with things like hanging up the sheetrock and stuff. And hanging up sheetrock is not considered a specialized skill, right? But they'll sit there and they'll have a supervisor who will supervise, every 10 people or something, say, hey, buddy, you're hanging up the sheetrock upside down or something. I don't know, can you hang sheetrock upside down? So if we're sitting there and we're looking at that, those CPA firm people that came in and are sort of volunteering their time to hang up the sheetrock, we're not going to count their time because what? They aren't providing us their specialized skill. The supervisor, yes, we would count their time because they are providing us a specialized skill. So it requires some amount of nuance in terms of how you look at it. But again, I think the key thing is the person providing us their specialized skill? So I've seen CPA exam questions that I've looked at over the years where they say someone provides secretarial services, and they're baiting you into thinking, oh, secretary isn't a specialized skill. Try it sometime. You don't think it's specialized, right? And so, again, I think you need to look to the description of what they're talking about. Changing turtle food, picking up dog poop in the example I gave is typically not something we can consider specialized. Okay, I'll try to stay away from giving you questions where you got to guess as to whether it's specialized or not. Yeah, yeah. Okay. Okay, good. United Together Labor Union has the following. And then they give us some information, and the first thing they want us to figure out is what should be reported under revenue gain and other support. Okay, now what happens? They're sitting there and they are simply asking us what should be revenue gains and other support. Okay, so we're going to pick up what would they do here? I forgot how this question worked now. They picked up 830,000, which was what, the first, is that those first three?
Yes, because they're not restricted. The other two are restricted by the donor.
Oh, thank you, sir. I missed that it's what, without donor restrictions? So since it's without donor restrictions, now where this gets a little bit interesting, the reason I have this question up here is notice we have sale of organizational supplies, which you're thinking is what? That's not a contribution, is it? But the question didn't ask me just contribution. It asked me everything. It asked me what? Contribution, revenue, and other support. So since it listed all those things, you had to pick up all of them, right? Okay. And thank you. It's what? I missed that it said without donor restrictions. Okay, so since it's without donor restrictions, I'm not picking up these restricted, right? By donor. Okay. Okay, good. Number 21, United Together Statement of Activities, what amount should be reported on the classification of program? Program are things not-for-profits do, right? Program are things not-for-profits do. So if you're a union, is labor negotiation something you do?
Yes.
Something you do. How about fundraising? That's what you do to survive. Membership and administrative is what you do to survive, right? So those would be considered support. So program is just the labor negotiations, the 500,000 here. Okay. In United Together Statement of Activities for the year ended December 31st, 2015, what amount should be reported under contributions with donor restrictions? I mean, this question is basically, can you read? Okay. The amounts that are with donor restrictions or with donor restrictions. That's the 30 and what? The 25? Gives me the 55,000 here. Okay. I think there's one more that's leveraging off this information. Okay. In the statement of activity for the year, what amount should be reported as support services? Support services is going to be all those things that weren't programmed, right?
Fundraising, membership development, administrative in general, because the organization relies on those in order to survive.
Correct. So those are not programmed, right?
Yes.
Good. Very good. Okay, number 24. During the current year, Mill Foundation, non-governmental non-profit organization, received 100,000 contribution with donor restrictions from the general public. Mill's board of directors stipulated that 75,000 of these contributions would be used to create an endowment at the end of the current year. How should Mill report the 75,000 net assets section on the statement of financial position? And what? That 75,000 is still considered without donor restriction because only donors can restrict, right? Board of directors cannot call out how those are to be used. They can call out how they're to be used, but that does not constitute a restriction, right? Only donors can restrict. In year 2, the Nord Association, non-governmental not-for-profit organization, received 100,000 contribution to fund scholarships for medical students. The donor stipulated that only the interest earned on the contribution be used for the scholarships. Interest earned for year 2 of 15,000 was used to award scholarships in year 3. What amount should NORD report as net assets with donor restrictions at the end of year 2? When they earn that money in year 2, that interest is considered with a donor restriction, right? Because they told them that the interest has to be used to fund the scholarships. What are we going to do in year 3? What are we going to do in year 3? We're going to award that money, so what are we going to do on the statement of activities? Huh? Say what? What are we going to do in year 3? When we award that money? Good. Excellent. We'll have a reclassification adjustment in which we'll do what? We'll show that money coming out of the with donor restriction and into the without, and then we'll show the what? Expense of 15,000. Good. On January 26, number 26, on January 1st, Reed, a non-governmental not-for-profit organization, received 20,000 and an unconditional pledge of 20,000 for each of the next 4 calendar years to be paid on the first day of each year. The present value of an ordinary annuity for 4 years at a constant interest rate of 8% is 3.312. What amount of net assets with donor restriction should be reported in the year the pledge was received? So remember we said last time that it is a what? Pledge that extends over several years. You have to calculate the present value. Okay, so the amount that is going to be received in the future has to be given present value, right? Now you look at this, has to be calculated present value. Now they look and they say the present value of an ordinary annuity for 4 years, and you say, wait a minute, this thing is supposed to be going over what? Over the next 4 years, so I have to use that present value factor, 3.312, and those amounts are with donor restriction because they're what? Restricted by?
Unconditional pledge.
They're restricted by what? By time, aren't they? Okay. What's the total amount of contribution? If they receive 20,000 up front and an unconditional pledge of 20,000 for the next 4 calendar years, why didn't I take these? Why isn't the answer 86,240? Why isn't the answer 86,240? Good. The first 20,000 not restricted to time because we got it, don't we? So only that what? Only that back end is what's restricted, right? Good. With donor restriction. Very good. Number 27, Bella, non-governmental, not-for-profit organization, received funds during its annual campaign that were specifically pledged by the donor to another non-governmental, not-for-profit health organization. How should we record this? Do they have variance power? Did Bella get variance power?
Could you explain variance power again?
Variance power means that I have the ability to spend that money as I see fit. If I don't have variance power, then I have to do what the donor directs me to do. If I don't have variance power, what should I do? Debit the cash, presumably most of the time credit a liability because I have to give that money to somebody else, right? And the beneficiary is the one that will debit a receivable and credit the contribution, right? So we're doing the accounting for Bella here, the recipient. Did Bella get variance power? Does Bella have variance power here?
No, she doesn't.
She, I'm assuming it's a she, I guess, because the name Bella does not. Okay, Bella organization does not. And so what happens? We'll increase the asset, increase the liability. And whoever this recipient is, they're the one that'll take the contribution, right?
Yeah.
Okay. Number 28, RAG Coalition, a non-governmental not-for-profit organization, received a gift of Treasury bills. The cost of the donor was $20,000 with additional $500 brokerage fees that were paid by the donor prior to the transfer of the Treasury bills. The Treasury bill had a fair value of $15,000. What do we carry investments at?
Fair value.
Fair value, answer is $15,000. I don't care what it was when the donor got it. The only thing I don't get in this question is how does a Treasury bill lose value? I mean, Treasury bill is backed by the full faith and credit of the federal government, so I'm not sure how it loses value. I guess unless it had some funky interest rate with it, and interest rates have gone up since the time that we got that Treasury. I'm just not sure how Treasury bills loses value. Anyway, Seems to me like you'd be able to redeem it at whatever its amount is, right? Whatever. Okay, stop, John. Number 29. Which of the following financial categories are used in a non-governmental, not-for-profit organization's statement of financial position? Statement of financial position is like the balance sheet, isn't it? Therefore, we're going to show assets, liabilities, and net assets. So all this question was doing is saying, do you know the names of the statements? Do you have to know the names of the statements? A non-governmental, not-for-profit college has a portfolio of bond investments that had an original cost of $2 million. The college board of trustees voted to hold the principal of this fund intact in perpetuity and designated the earnings to reimburse faculty for travel to academic conferences. What a waste. During the year, interest of $50,000 was earned in cash. The fair value of the bonds was $1,980,000. What amount should the college report as net assets with donor restrictions? Answer, 0. Only donors can restrict, right? The board of directors can sit there all day calling out that that money is used for all kinds of important academic trips. And the reality is what?
Board of trustees are not donors. They mainly have variance power.
Well, they may or may not have variance power depending on how the donor has stipulated that money is to be used. If the donor has stipulated that money is to be used outside of the organization for another entity, another not-for-profit, then that money is considered a liability. If the donor has said that that money will stay with the not-for-profit and be used in the not-for-profit's operations, then that money has been given variance power and they will take it as a contribution. That contribution, depending on how they've directed that contribution be used within the not-for-profit, will determine whether it's with or without a donor restriction.
Yeah, but I was right in saying that board of trustees, board of directors, they're not donors.
That part was correct. If the board of trustees is not donors, that money is considered without donor restriction, right? Because they're not donors. But where you danced off the stage was when you start bringing variance power into it. Variance power now starts to say, hey, is that money going to be used within the operations of the not-for-profit, or is it going to be used outside the operations of the not-for-profit? And if I've stipulated, hey, you got to take that money and you got to go over there and do that with it, then I don't have variance power, and that's a liability, not a contribution. If I've been given variance power and they say, hey, you can use it in the not-for-profits charter, then if they've called me out how I'm supposed to use that money in the not-for-profits charter, it's with a donor restriction, the contribution is. If they've said, hey, use it however in the not-for-profits charter, then it is going to be without donor restriction. So the variance power issue comes in if they have directed me to send that money outside of the not-for-profit somehow. Okay? Question? Okay, a couple things here. Let me go ahead and stop the recording. This part's not relevant.